Hi guys, it's Thomas here from COTbase.com. Welcome to a weekly COT review. Today we're going to be looking at the 20th Commitments of Traders Report of 2020. And as we always do, we will start the analysis by looking at the largest changes in commercials positions. But before I do that, I just want to remind everybody who is new to COT data, COT analysis, that at COTbase you will find tons of information on how to use the COT report, how to analyze it. For instance, here on our help page, you may find educational videos that will guide you through this report. We also have some written materials here on the On COT page for you. So give it a try. And back to the review. Here we have the 20th report. We shall start off with the largest change that we have witnessed here in the Kansas City wheat. We have a 19% change. But if you measure that or compare it to the past 52 weeks, you may see multiple examples of similar changes. It is definitely larger than average, but I wouldn't consider it surprisingly large. It does show a more bullish bias, or after this decline that's been going on for a few weeks, it is a bullish COT change signal suggesting we may see a bit of a rebound happening early next week. We shall see about that. If we jump to the 5 years chart, you get a chance to see the stress levels in this market. And of course, if you look at this 5 years time horizon, you may see the most bearish extreme back in June of 2018. There was a similarly large bearish extreme in August, so just when we had that top in the market. And of course, we find multiple examples for bullish COT extremes as well. We are more or less in between those two extremes, so in relative terms we can find a few like this relative bullish extremes. If you, let's say, if you go back to the 2 years look back period, you may see that relative to this 2 years time horizon, that was a relative bullish extreme. Here we have another example, and again from May of 2019. So I wouldn't say that in this recent report we can really act upon the extreme situation. It's mainly the COT change signal that we can really do something with. So we shall move on and look at the crude oil, the Brent crude to be specific. And if you remember in the past few reviews, I talked about the special COT complex charts that we put together. And if you remember, I talked about how interesting it is to see opposite signals in the Brent crude and the WTI. And that's a great example how you can benefit from our complex COT charts. But focusing on the Brent crude oil, we have just to go back to the 1 year chart, we have a 16% change in commercials positions. It is a slightly bullish COT change signal, but really nothing too unusual. I wouldn't put too much emphasis on that signal. So let's just move on and have a look at the COT Extreme. And in this Brent crude market, we are still closer to bullish extremes, but caution is advised. And of course, there are occasions when these significant large COT extremes do not affect the market in the way we expect them to, because after this bullish COT extreme in December of 2019, you can see the market basically crash. So we should be waiting for another build up in the stress levels in all major trader categories before we can state that there's a higher chance of a major trend change. So we might be witnessing lower prices in this market for multiple months, possibly years to come. The wheat complex market, I will jump over that. If you're a subscriber, you can check it. Lumber is our next market, 12% change over there in commercials positions. Back to the 1 year chart, you can see it more easily. It is slightly above average. We've seen much greater changes in the past. It is suggesting weakness coming early next week. If we move on to the 5 years chart, you can see that we are still much closer to bullish COT extreme levels. On this 5 year chart back from 2015, we've of course seen much greater extremes. So that, it's just a reminder that we may, see much greater extremes to come. Nevertheless, in relative terms, it can definitely be considered a high stress level, suggesting some possible increase in the price of lumber. Moving on to large speculators COT Extreme, we've got the Minneapolis wheat on top of our list with an all-time COT Extreme. So 2 wheat markets to analyze. So here we have that signal And large speculators also, of course, commercials are at their all-time COT extremes, just barely almost at that extreme from September of 2019. So there's no question that this extreme suggests possible strengthening in this market. You may see how well these extremes pinpointed times to consider a long positioning. You can go back, of course, multiple years, and it is suggesting we should be expecting a halt in this decline that's going on right now. Soybeans will be our next market. Here you can see a bearish 100 report extreme in the market. Of course, now we have the chart ready. You can see that extreme over here. It can grow. You know, we've seen larger extremes in the past, but it's definitely amongst the larger ones. Of course, I just want to show you bearish examples for that. So the most bearish COT extreme in this past 5 years was from June of 2016. A beautiful example, and I said this many times before, soybeans market. In general, grains are definitely considered markets that you can really take advantage of COT analysis. So here we have, again, an example of a bearish COT extreme. The only thing that is a bit surprising to see is that we are actually in depressed price territory. So, you know, we had that, I would say, well, not really a bullish extreme, relative extreme. Nothing really happened to the market. So this suggests, and of course, if you look at small speculators, they are definitely at an extreme. So let's not forget about them. 835 report extreme in small speculators. They haven't been so optimistic in soybeans market for so many years now. 835 basically reports is roughly 835 weeks. So that's a huge extreme over there, suggesting a weakness coming in soybeans market. So that is that. And last but not least, the Mexican peso, where we have a 97 report extreme in large speculators. You can see that on the chart over there. We've been talking about the Mexican peso for quite some time. There's definitely a bullish COT extreme situation. But caution is advised, because if you look at that 5 years chart, it can definitely increase to even greater levels. And of course, the situation that we have in markets suggests that, you know, betting against the US dollar could be a little bit risky right now. Nevertheless, just focusing on the report itself, it's definitely a very significant signal. I'm just saying, don't be surprised if this grows while the Mexican peso can decrease in value. We shall see. But the COT report suggests we may easily see higher prices coming in the medium to long term. Now, if you want to look at other COT charts, then of course COT Base offers you COT charts in all markets. We only show you a few here at or in these COT reviews. You can of course analyze new COT report types, other data types, all the data sets as well, and of course dig deeper by looking at, for instance, multiple report change analysis, the COT index, the move index, our special long-term trend indicator, something very, very valuable. I would recommend you to check out. We also have a volume and open interest analysis in this service as well. So I appreciate your attention. Thank you very much for being with me. Have a wonderful weekend. Take care and see you next week. Goodbye.